Have you ended this year like, dang, I missed out. I didn't get that business loan. I didn't have my affairs in order. I am going to tell you how to get that business loan, what's required, how much you could possibly get, and steps moving forward. Let's talk about it.
Make the money. Don't let it make you.
I am Q Rowland. I am your business growth coach and your money mentor. Yes, y'all, it's the end of the year, and maybe we made some good decisions, maybe not. But either way, I hope all of you did well this year in your business. If not, we are going to work on doing great next year. All right, so one of the questions that I get a lot is, how can I get a business loan? Number one. How much can I get in that loan? That's number two. And number three, what do I do with that loan? Make sure you like, comment, and share. And most of all, subscribe to my channel so that you can stay on top of all of the latest money matters. Okay, so let's jump right into it. How do you get a business loan? There's just a few steps that you need to take to actually get this loan. Number one, you want to have good personal credit. A 680 is the bare minimum that most banks will give you a business loan, the bare minimum. So you want to strive for the mountaintop, but if you can't quite get there, 680 is your minimum. So you want to have good credit. If you need help with your personal credit, I do have a class on my website called Credit on Demand. It teaches you everything you need to know to get that credit so that you can get approved for a business loan. That's at qrowland.com. You need your articles of organization or of incorporation. Whatever your state decides to call them, you need them. The other thing is that you need your EIN number. You need a DUNS number. And in a lot of cases, as a new business or starting out with, within the last 5 years, you will need a good business plan. What do I mean by good? It needs to be accurate. It needs to have some projections. And just let me go back because I want to tussle with y'all. When I say accurate, business plans are based on a lot of projections. There are no guarantees in a business plan. But what business plans do specifically is tell a bank exactly what you project or what could be or what might be and what to maybe expect. This gives them the idea that you have done the work of researching your industry, your business, what could possibly be of your business. They don't want a business that they don't have any numbers on, nor do you want to start a business that you don't know the numbers. You should know the numbers on the business type as well. So this is a good way for you to learn about your business, your market, your industry, all that stuff. But this also tells a lending institution exactly what you project your sales and revenue and all that kind of stuff to be. So it gives a good overall picture of your business. So having a good business plan is required in some cases, not all. But if you are a newer business, it is likely going to be required. Now, how much can you get? This is really based on a few things, such as your credit score. Of course, in any lending situation, your credit score is always going to be the first thing that they look at because this tells them how you pay bills. How do you repay those loans? How do you handle debt? So your credit score, the higher it is, the more money you'll likely get. So that's first and foremost. So that personal credit comes back into play. Let me just hit on one thing. As far as the personal credit, some people will say, well, your personal credit don't matter. Well, let me tell you, it does matter because you are a small business owner. They don't have corporate credit to look at for you. You are a small business owner, and the only thing that they can use to determine your credit worthiness is your personal credit. This is why it's so important that you keep your credit intact, okay? So when they tell you it don't matter, they're not telling you the truth because it does. So that's one factor that's considered when you are looking at getting a business loan. The second thing is your business plan. What type of money are you planning to generate? And these numbers got to make sense. They can't just be pulled out the sky because if they don't make sense, they're not going to give you the money. But if they have some good workable sense in it, they will lend you the amount of money based on your projections of what your revenue will be and what possibilities of revenue will be, will determine the amount that you can get. So there's no set number on how much you can get unless that lending institution says up to X amount of dollars. Now, if it's X amount of dollars, that's the most you're going to get. We know that. But between that 0 and X amount of dollars, that is solely dependent on what type of business you have, what type of money that business is expected to make. That's really what it's based on. So outside of that, really, those are the two most important things. Is going to be your personal credit, your length of time of being open, as well as what type of industry are you in and the projections you are expected to earn. Now, business credit cards might be slightly different. Business credit cards usually will lend you, in a credit card, they will give you typically 2 to 3 times what you would get approved for under a personal credit card. So that's kind of the expectation. It's not a rule, but it's kind of what kind of happens when you apply for a business credit card. So as long as you have all your ducks in a row and you apply for that business credit card, and also know you're probably going to be a personal guarantee on this business credit card, that, and again, because you are still a small business owner, your personal credit matters. So just know that you will probably be approved 2 to 3 times what you will be approved for personally. Okay, so if you're wondering about a business credit card, that's kind of how that works. It's kind of different from a loan or a line of credit in the sense that they use different, types of formulas to decide what your credit worthiness is. Last, what do you do with this money? What do you do with the business loan? I hear this question all the time, like, why do I need a business loan? My mother told me not to use a business loan. My friend told me that I shouldn't borrow money. You shouldn't put yourself in debt. For years, we have been taught that debt was bad. And what we have to retrain our thinking is to understanding what is good debt versus bad debt. Good debt is debt that will increase your revenue or your net worth. And bad debt is things that never bring you any value, such as clothes or jewelry sometimes. I mean, some jewelry has like a value after the fact, but things that just don't bring you any type of value is bad debt. Credit card debt, bad debt, unless it's meant to make you more money. If it's not meant to make you more money, it's bad debt. So understanding the difference between good and bad debt is going to help you make better money decisions in terms of credit. Credit has never been considered bad until some of the people who were less educated about money and credit began using it and got themselves in bad situations. And so then they started feeling like it was bad to have credit. They started telling other people, and then this message spread. But we have to change the narrative. No one who has any successful business or any wealthy person who have done it, different business ventures, have only used credit. They use credit. Nobody reaches in their bank account and finance their new business. Even if they're a multi-billionaire, they are borrowing that money. And the reason they borrow that money is because we should be using other people's money to leverage. So how do you leverage that business loan? That business loan is leveraged in things like a new product ad, a new location, or expanding your existing location, or maybe doing a renovation that will bring more people to your space because now it's more inviting, adding a new service. Things like that are ways that you can leverage your business loan. Your business loan is not meant to take to Gucci or Louis Vuitton and buy you a pair of shoes or a bag or anything like that. The business loan is meant for you to reinvest into your business in order to grow your business, therefore leveraging the money that was loaned to you. So you want to make sure that you aren't misusing those funds, not misappropriating those funds, not commingling those funds. What does commingling mean? We've talked about this before, but commingling simply means mixing your business with your personal or business to business, things of that nature. You want to keep all of your transactions, keep it completely separate. You want to make sure that you aren't mixing those things. It's super important, especially for IRS purposes and auditing purposes. You have to keep all of your things separate. So that is what you do with a business loan. Do you need one? Hey, I always say, even if you don't need it immediately, you might need it at some point. So to me, it's always worth it. I think that it's worth having business funds that you can use, even if you have a need for working capital at some point, or a bill that comes out unexpectedly, or repair, anything. You may need that. So I highly recommend you look into getting a business loan or line of credit. Line of credit I love because if you don't need it right now, it's there when you do. Don't forget to subscribe to my channel. Thank you for tapping in. Remember, go make that money, but don't let the money make you. I'll see you soon.